What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing an update on Tesla stock. And in today's video, first of all, I will show you where we are on the price chart and how we get there. Then I will continue with the fundamental news. I will show you what was the results of Jerome Powell's speech, and I will show you the amazing Q4 and full year 2022 earnings report of Tesla. And at the end of this video, I will share my thoughts and my technical analysis, and I will show you what should we expect next. And before we get into all of that, if you guys would like to earn 2 free stocks with Moomoo valued up to $7,000, please check out that link in the description below. All you have to do is sign up for an account and deposit as little as $1. This is guaranteed free money. Full details you can see on the screen right now. So let's start with the price chart. I made my previous video right here at this very top, and I've told you that we have to form the bottom of our C wave, and it is the retracement wave. As you can see, it is quite messy chart, but the main idea is that we have to have one more leg to the downside, and we might have it as a double bottom pattern at the range of about $850. Or we might have it truncated and we might land it even at $881. We have for now this week at this very point. Or we might have an extension in the fifth wave and we might land at about $800. So I will show you what should we expect next in my technical analysis. We are still in line with my forecast and I will show you what should we expect, but for now let's continue with the fundamental news. First of all, let me show you this article. It was published on January 26th and it says Tesla falls despite earnings smasher as supply chain issues crimp full growth story. And let me quote you this. Tesla trades lower despite topping estimates with revenue growth of 65% year over year to $17.7 billion. The EV giant may have rattled investors by noting that its factories have been running below capacity for several quarters, with the supply chain being the main limiting factor. That partial headwind is seen continuing in 2022. The company racked up $2.3 billion in GAAP net income during the quarter and $2.9 billion in non-GAAP net income. The automaker reports it produced 305,840 vehicles in Q4, 70% increase year over year, and delivered 308,650 vehicles, increase 71% year over year. Operating margin was 14.7% of sales, to improve from last month and top analyst expectations. Automotive gross margin came in at 30.8% versus 30.5% last quarter, and the consensus mark of 29.9%. Incredible numbers, incredible. Production update. Tesla says the company is still in process of finalizing the manufacturing permit from local authorities from Berlin Gigafactory, which will allow it to start delivering German-made vehicles in Europe. After the final certification of Austin-made Model Y, Tesla plans to start deliveries to customers from that new Gigafactory. So, we are about to see their start of delivering the new vehicles from Giga Berlin and Giga Austin. As far as deliveries guidance, the electric vehicle juggernaut sticks with the multi-year deliveries view for 50% average annual growth. Of note, Tesla expects hardware-related profits to be accompanied with an acceleration of software-related profits this year. And I have to say, their earnings report is really amazing, and we don't have any information except this one, that the supply chain issues will be the limiting factor for 2022, and we don't have any updates related to their Cybertruck, semi-truck, or about Tesla Roadster or new models, and definitely we will see this forecast in upcoming months, and this will be next potential catalyst for the company, because for now we all know that Tesla will beat the expectations. But what should we expect in the future? It is some kind of mystery. And that's why we have to see this information from the top level of C executives. And this information will be a major catalyst for the price of the stock. So, and let's continue with the Federal Reserve news. We are on CNBC.com and this article was published on January 26th, and it says Federal Reserve points to interest rate hike coming in March. The Federal Reserve on Wednesday provided the clearest hint yet that it could start raising interest rates as soon as March. With inflation well above 2% and a strong labor market, the committee expects it will soon be appropriate to raise the target range for the federal funds rate. The central bank said in a statement that concluded its two-day meeting this week. The Fed chairman, Jerome Powell, said asset purchases also are likely to halt in March, and the central bank released a paper outlining principles to start significantly reducing the bond holdings on its balance sheet without indicating a specific time frame. And let me quote you this. In a move that came as a little surprise, the Fed's policymaking group said a quarter percentage point increase to its benchmark short-term borrowing rate is likely forthcoming. It would be the first rise since December 2018. Chairman Jerome Powell added that the Fed could move on an aggressive path. This means they can increase the interest rates for more than 0.25%. And definitely this event will negatively affect the markets. So, what to expect next? In my opinion, let me show you that next meeting will be on March 15 and 16th, and this means we have at least 1 month of medium-term bullish market, and this means we can rely on the next leg to the upside for the majority of the stocks, and that is definitely a good sign for all of the markets. So let's continue with the technical analysis, but before we dive deeper right here, please subscribe to my channel, hit notification bell and hit the like button. This helps me a lot. So guys, as you can see, we went higher from our previous video, and in my opinion we still have this as our top of the fourth wave, and as you can see we have this movement to the upside in a shape of simple zigzag, and it corresponds with the Elliott wave theory. And that's why we still have more chances to hit lower targets in order to complete the entire C wave and in order to have more room to grow in the future. So, in my opinion, in upcoming sessions, if we won't exceed the range of about $982, it is the bottom of our A wave. In this case, most likely we will have next leg to the downside, and this leg might land at the following target. If I pull the Fibonacci extension tool from the top of the third wave to the bottom of the third wave, and third point at the bottom of the retracement, we have to adjust this tool. We have the range of about 0.786, the most common range where we might land the top of our fifth wave compared to the third one, is at the range of $795.94. This means we might have this range of support as our major price target for the medium term in upcoming week. And it is a confluence with our golden pocket pattern. It is the major range of trend reversal that we might have for now. And on top of that, it is the bottom support line from our channel that I drew previously on my previous video. So I think we have to be cautious, and I've told you that the price action on upcoming days will be choppy, and as you can see it is. But all in all, from the fundamental standpoint, I think Tesla from our current ranges will show at least 50% growth in 2022. And that's why, if you want to just invest in this asset and don't want to micromanage your position, just add to the ranges of about $900 and below, and this will lead you to massive profits in the future. So I think from the technical standpoint that's it for now. If you like my video, please hit the like button and subscribe to my channel with notification bell, and see you guys and girls next time. Bye!